All right, good evening, guys. Kenneth Tortoise Capital Nightly Strategy Podcast for December 17th, 2022, Swing Trades. So, Ken H is on a sabbatical now for a while, and he's been carrying the load for us for 18 months with, 15 or 20 charts a week. It has made all of us better swing traders. It's made him a better swing trader, but he's taken a good break. A well earned break. So Dan has decided to step up for us with a couple charts, and I'm going to go through some my standard view of the tactical frames. So this is an opportunity for you to get some free chicken, to post some frames for swing trade review for Saturday nights for the week ahead. So the opportunity is there. Just post them in the chat room, and then we'll get commentary on them. So let's start with we will start with Chi Wing Chong's sector Z scores, and we're beginning with the XL series. So we're noticing, here's the zero line where the slopes are still positive, but we've come down from like 2 sigma and 1 sigma. Now everything is moving towards that zero line. Energy has already collapsed, although there is some sign that I think from price last couple days, it wouldn't surprise me to see this start to turn where it turned last time. We saw some strength in oil and in Chevron, for example. Finance is the weakest of the rotating sectors that we see. Technology is resisting the sell-off the most, but it too is fallen considerably. Materials are down, and the whole S&P is down. So this is an entire broad market. Now, I'm not going to say collapse, but certainly a correction, a reduction in price across the board. This is not a rotation of leadership, which is what you see sometimes, like here. You will see that in this phase, energy was the worst, but it was the first to recover, and then the first to fail. So energy as a sector moves on its own pace, and so it can be traded as a sector, independent of what the rest of the market is doing. Although the impact of energy on the rest of the market cannot be underestimated, but it moves to its own drummer, if you will. And that's why, to me, now that it's past 1.0, I would not be surprised to see it turn first. Watch oil prices. And then in the competition between consumer discretionary and consumer staples, which had been responsible for the recovery of the S&P, you see out of this move here, staples had the biggest net positive change. And when it started to fail, notice that when it started to fail, then the market started to fail. And the consumer discretionary stuff never really got out of the swamp, but at the zero line. A lot of Tesla is in XLY, and this is really showing some weakness. So that's not a healthy place for the market right there. All right, let's take a look at Dan's work here. So here's Tesla on a swing. Let's see what he's got for us here. So we have Tesla. He's using the weekly, daily, and 65-minute setup, kind of almost a triple screen looking thing. And this was the collapsing dragon breakdown on the weekly. This was the PSAR flip back at 250, collapsing dragon at 218-ish. This little consolidation broke and is now in free fall. You know, that collapse through 170 was critical. That's this price here. When we look at the daily, you can see that again with the PSAR flip being being strongly indicated here at about 176 on the short. That's a reliable signal for short, by the way, as we know. And then this price comes right over here to 170. Even on the hourly chart, that 170 collapse gives a reliable entry. This is actually a second signal right there. When price rejects the PSAR and then collapses further, there's more pain and suffering on the way. So I would agree, Tesla is an instantaneous short on the first sign of weakness. The very extreme nature of the sell-off, where it's at Z3 on the weekly, on all these measures, it's out at least past Z2, but also Z3. That's an indication that sure, this thing can recover, but notice how long it took for those to recover. This is the one that I would be just mindful of, that the last time it was at a Z3 and recovered, it went from 168 to 200. So that's a $32 gain on 168. That's 1 over 5. Yeah. Yeah, so that's a 20% bounce. The last time it was at Z3. On this Z3 excursion in 3 days, it went from 180 to 200, which is an 11% bounce. So I'm not saying I love Tesla for the long run here, but this one to me is one where it's easy to believe in the collapse. It's also unsurprising to see a 10 to 20% bounce that only means that it comes up to 180 and then fails. So Tesla still the most important stock in the world. It's a proxy for normal gains on market leadership, and that has really just collapsed the belief in Tesla. The word on the street, the consensus is that Musk is burnt out, is using Tesla as a personal ATM to fund his Twitter megalomania dreams. I don't know. That's a reasonable interpretation to me. And that could help explain some of the dissatisfaction among all the shareholders, many of the large ones in public calling for him to be removed from the board. Tesla without Elon is just a car company. And then that was never the big part of their lure. And it looks like Michael Burry might be right in the long run. I don't think he's short as big as he was before. But there you are. Tesla. Good frame, Dan. And since we have just a couple of us on tonight, if you have any questions, go ahead, unmute, and then we can talk about them. Any commentary on Tesla?
No, I think that was some very good points. Appreciate it. I think I might stop and reverse if it fails to follow through to the downside.
Yeah.
But I thought that little shelf on the hourly chart might, if that breaks, it might move it might move to R.
Yeah.
And
Yeah, this one right here.
and I'd probably be quick to get out,
Yeah, I think you can definitely see that, almost like this one, when that broke, that went from 160 to 150, and that's an 8% collapse out of this one. So that could drop 8% just like that. On the other hand, this little shelf goes from call it 175 to 185. That's about another 6%, so, and that signified nothing except a 1-day excursion. So if that's the kind of move you're looking for, there's about a $1.40 on Tesla for the R10, I believe, somewhere, if I remember right. Just a minute.
I used the R3, but I used more than the R3.
Yeah.
Because there happened to be a swing high, right over that.
Yeah, I'm looking. That's my daily with the sniper framing, and I'm looking at $1.38 on the R10. The R3 is probably, what's it, 320.
Yeah.
And so, let's see, where's my, yeah. So that break there, to here, yeah, that certainly looks reasonable when I look intraday. If I go to the 30-minute, which is kind of a little more aggressive than the 65, you can see that looks that's easy to short. Yeah, there's no support for this thing anywhere.
Right.
Like tactical, this is just pure free fall. The last support that there was this 165-ish, that's that key 170. So yeah, if that breaks, look out below. We go to the 3-day. That looks like a heart attack.
Yeah.
Yeah, so this thing is the last great, support level was this. So 140 is in range, and it's at 160 right now. So that's minus 20.
That'll be a nice move.
That's an easy 12%.
Yeah.
And the only people who are, I mean, think about how all these people are feeling right now. Or this guy that bought on dips.
Mm-hmm.
Maybe
it's time. Maybe it's time I get out.
Or, yeah, it's like, hey, there was a time when I was at 400. I bought it at 20, and now it's at 400. So that's a 20x move. Oh, crap. It's now only an 8x move. That's painful. They've given up 2/3 of the value because of the log scale,
Yeah.
So yeah, you can't look at that and then rationally say, oh no, I'm in this thing for the long run just because of this move here. I remember that move, dude. You had 1, 2, 3 legs down that told you this was no longer happening. Yeah. So this is a pure tactical trade now.
It's kind of when you look at it like that, it looks like a head and shoulders with a kind of a double head there, but
yeah.
So it's still got some downside on that pattern too.
Yeah. If I go out, look at the 9-day, let's see, the 9-day. Yeah. Yeah, this thing is just no love anywhere. Even on the 9-day, again, you can see now this is that last hope of a shelf.
Mhm.
And you're talking over 18 months ago. So, that's doomed. Over. And it's not like they're making enough sales to really, to be a cash flow machine. They're not. They're not making money. So that's that. All right, let's take a quick look at Boeing. Oh, sorry. Yeah, so Boeing, it's hard to explain this other than saying, do people think they're going to make money because of war? It has to be. The president asked for 810 billion in his defense budget. Congress punished him by giving him 848. Boeing always benefits from that. So 1 week, 1 day, 65 minutes. Some clear kata twos. That's real support while the market was suffering. Yeah. Leg one, leg two. Notice leg one was a clear run up. Leg two was a little more measured with wider volatility on the dailies, but still pushing the top, like all-time high kind of stuff. So, yeah, I like the follow through right away. And then this one is the test. The top of the dragon, top of the RL10-ish looking thing. So 2 units of reward. And then I think if this breaks above, say, 190, you could get a second position on that thing. So I like that one. Yeah. The break. If this were to break down right here, you might get it inside here, but the safer play is waiting for 181, with the idea of it going to say 175, $6. Yeah, this is. I'd rather be a successful long than a successful short, because a successful long should last longer. Just given how this is a sign of real conviction. So that doesn't look like the kind of a pattern that's going to trigger panic selling. So
It's just because it's pretty volatile.
yeah,
I'm afraid of getting stopped out on a swing
yeah,
trade pretty easily,
yeah.
and that's why on this one I don't think I want to enter it unless I can get in on a turbo and sell half.
Yeah, I would agree with that.
To
Yeah,
kind of lower that stop under that base where you have the
yeah,
black line now.
yeah. Because otherwise,
For the
what you
remainder.
really need is, if you were to use the PSAR break as a stop, that would actually be two. You'd have to have half the position size.
Yeah.
So if you take the smaller position, you could use this as your turbo and that as your core. So you buy it all on turbo on the breakout. And then if it starts to stall up in this area, you quickly cut the turbo, and then that pays for the open risk on the core. And then you try to get that to no lose. So that looks like a sensible approach.
Yeah, or even try and go in on a lower time frame still, just to support the swing trade. But I like your idea, maybe even better. Yeah.
Yeah. So if we looked at Boeing real quick here. I'm going to look at it on the 10s first. Yeah, so this is the argument, like on the 10-minute. It's near a vulnerable spot, right? But if this goes, we're entitled to believe it could get at least, plus $2. And if we look at the 3-minute, if you're looking truly intraday first, yeah, you can still see the resistance level here.
Mm-hmm.
So yeah, so this breakout, it has to get above, say 185. And if you're talking about really about $1 risk, for the intraday turbo, that's probably reasonable. And then when you look at hourlies, yeah, on the hourly, it just recently broke that PSAR. Right? And if you're using a dollar risk, so a breakout from here, and your dollar risk is really just right there, you're just betting that with that as your risk, that this thing has a reasonable chance to get to here.
Yeah.
And so if you got above 186, I would be ready to pull the trigger on the turbo, because now you're getting from 185 to 186. While you're entering maybe 184.5 to 186. So you're about $1.50 to a $1 risk. I'd be looking to cash the turbo here if it got weak. But if it continues to go, and it could, because look at the size of these hourly bars. You could easily get a move to 188 in 1 hour. So I think that's it stood out so much compared to the rest of the market this week that there's definitely guys hitting the gas pedal on that. And then if this gets above, say, 189, that thing is gone. Yeah, there's no resistance anywhere in sight.
Yeah.
Okay. And so let's take a look at, I think it's silver.
Silver, yeah.
Or let's see. Yeah. Yeah, silver is funny. It's never going to be a sustained asymptotic move, although that sure looks like one. But we're already 2 legs into this.
Mm.
The better play on silver, it starts from the weekly around 1750, and this is already getting close to it's already out of the Z3, and on the weekly has already starting to roll over. That's already. So this is about the last tactical recovery inside that channel for it to continue for a third leg. If it does give you a third leg, it's gone from 18 to 20 on this leg. This leg has gone from 1950 to about 22. So that's a $2 and a $2.50 leg. So if this were to hold and it's got a base at, say, 21, then a shot to 23 is really the maximum upside that you could expect. And so if your entry is at 2140 and your exit's at 2113, that's 27 cents. So call it 30 cents, and you're looking to play for $2 upside. You got a 7-to-1 reasonable trade if it gives you a third leg like those 2 legs have seen. Now, it's not unusual for the third leg of that move to give you half, right? To see it get to 22 and then start to fail, right? So that's what this really is showing here. And then that move is, maybe 70 cents on a 30-cent risk. So you still have 2.3 to 1. So that's still reasonable. I would be ready if this collapses to see it come back to 2040. So that's a 60 cents on the downside. And if you're using approximately the same risk, you got a 2-to-1 on the downside. You can play ZSL is a 2x silver ETF on the short side, so it's an inverse, and that is a tactical trade. It's just that silver is geared so much to the movement of the price of the futures contract that it's governed by that as a commodity, and so that tends to roll over quite a bit. You don't get those speculative moves anymore, like when this thing went to 50. So it looks to me, the more likely example is it's 2 legs up and it's near the top of its channel, and I can make the case why it breaks down from here back to 20 as more likely than this move. But but you got 2-to-1 just to the top of the channel, and it had an opportunity to fail and it didn't. But 22 is a reasonable upside, and I'd be ready to just make bank on that little move that you've marked off. Purely tactical.
Yeah.
Makes sense?
Yeah.
Okay. All right, let's, I thought I would try a speed run here since we're here. See how we're doing. Maybe a 30 minute. Yeah, this is kind of a bear normal-ish market. Not kind of, it is a bear normal market. So I'm going to be looking at the tactical breakdowns on the 30-day, looking back 30 days for the context. And so, well, if we start with Alcoa just as a standard framing, I'm just trying to get a feel for where it is inside the 30-day frame, 10-day frame. Then I'm really taking a look at the size of the 5-day frame as like a volatility percentage, and then trade location compared to the 10-day box. So this is clearly oversold. There's no support until you go way back to here. So that kind of a breakdown is certainly reasonable. At the same time, finding support here makes it move back to here and then to here in 2 steps pretty easily. So this is a perfect critical state for Alcoa. I like that one. So that's the, I'm going to be looking at these for like 5 seconds each to see if there's something that really, and I'm gauging my own initial gut reaction. So I see Alcoa as a fence sitter because right here it's bisecting the 30, and it's had a large 5-day range. So in play can break either direction. Apple just horrible. Oh, this is a symptomatic of the entire market. Instant short. But at some point you got to say value opportunity. Those 2 guys here thought so, and that gave you this run up. So not impossible, but primarily short. That's in play. It was worse than Microsoft. And just by point of comparison, that's Microsoft. Notice where its 5 and 10-day range is inside the 30. It's much easier to believe in redemption and support from Microsoft, for instance, out of this, rather than Apple, which completely broke down in the other range. So these are not moving in tandem. That is a vote away from the consumer of Apple and to the sort of industrial supplier of Microsoft. And Dan, jump in if you got questions or need elaboration. Since you're here, you you and John get some free chicken.
No, no, this is great commentary. I only had 3 swing trades because I looked I looked at the ones that you talked about on the weekend report,
Yeah.
and the 3 that I found were the only ones I saw that had a uptrend that could be supported
Yeah.
if it went up. And on the short side, there were a lot that looked short, but the one that I found, Tesla, was the one that was most obviously ready to go
Yeah.
in terms of a immediate 65-minute setup. But your way of looking at this with the TC2000 machinery here is kind of a whole nother dimension. It's really cool.
Yeah. Yeah. So this is one of the things I just find is that, I use the spreadsheet for numbers and whatnot so that I don't get lured into trading every chart I see. But by the same token, I periodically will do this kind of speed run just to get a feel visually for where they are, to get the artistic side of my mind. So Arc Genomics, this little breakdown here was a rejection of that support level, and that's when she was back in the news and did well. But this is like, dude, we've had enough of your groovy stock picks. That's trouble. That's in biotech too. And this is her in Arc Innovation, and she has such a large position in Tesla that this is just no hope of recovery there. The anti-ARC ETF is one that could be played easily here too. This for Luke and the gang that is following the Aussie. This is a natural limit right here. This could be a new start or a new collapse. The last time from there, it voted up in 2 legs, and there's 1, 2 down, so it's right at the support level. I'm expecting big things from that tomorrow or Monday. Bitcoin, right at the crossroads, support level. Some initial urgency, but man, that disappeared. If that breaks, that's a 10% loss waiting right there. Cliff had real strength on Friday, and believe it or not, inside that was a tradable move inside here. Does not look as damaged as the other ones. I wonder why that's not showing. There we go. That's what I needed. Cautiously optimistic on Cliff because of the Kata 2. I like it. The breakdown is also leg 1, and then if 1450 breaks, 2 scoops short. Coinbase ready to collapse. Lumber ready to collapse. Agriculture dead money. Blended commodities. This is a Kata 2 that's ready because of oil. That's oil is giving it its slightly upward move. So if you're going to play oil, I would rather see like XOP. XOP, I think, is a better pure play on oil. And I like this. I'm leaping ahead over to energy just while we're here. I like that in energy. And I'd be searching for 3450. I thought it was better than this, but it really isn't. Why did I think Chevron was good? Oh, I'm sorry, that was finance. No, I was going to say, man, that looks crazy. Yeah, energy is not much better. Not as weak as finance. Finance looks worse. Yeah, I kind of like finance short right there. And then if that 30-day low at 33 breaks, it's gone. Diamonds, this had been the strongest of the U.S. sectors all the way through here, but that looks like capitulation, honestly. And it's only got one more leg. If it breaks below, say, 315, that whole U.S. market is tubing. Now compare where that is on a relative basis to the S&P. S&P's worse. The Qs also bad. Yeah, so all the U.S. is suffering right now on that 2-day sell-off. The Russell is the worst of all, though. So this is the speculative U.S., broad speculative U.S. That's ready to collapse. That would be like my priority if you're a futures trader, TF. That's ready to collapse. But then also it's at such an extreme level. A play to here is not out of the ordinary. Boy, I love that setup right there. I'm like a hyena sometimes. Uh, Real estate, no love for real estate out there. The housing market is just beginning its sell off. This is a long, slow decline. Yeah, you can see that it's already started. That's the last time I swung traded. I'm ready, I think, to start swinging that one again to the downside. Lithium, oh my goodness. Nothing good there. Microsoft is actually one of the few that we've seen so far that has anything stable, remotely stable about it as a market leader. I mean, if you have to be invested anywhere of the charts we've seen so far, isn't that the best one? The relatively small volatility compared to the 30, generally uptrend, orderly pullback. That's the best looking chart on the long side of anything we've seen. Oh, marijuana. This is, you got to be loving this one, trading against the stoners. Dude, that's from 15 to 8. That's minus 50% in 10 days. And right at a level where it's held a lot of support before. So manic depression, critical state. Love that one. NVIDIA, now we're going to take a quick look at the at all of the semis. This has held up better than the other techs, but it's showing the weakness of the last 5 days. But that's not a bad looking chart. And if you think it's going to work, 30-day high is a reasonable target. So let's compare that one to Intel real quick. Intel weak, getting weaker, and then Texas Instruments about the same as NVIDIA. So if I wanted to speculate in tech, if I was looking at weakness, I would go to Intel because it's already collapsing. And it may be time to get back on my shorts on that one. Yeah. I should have had it 2 days ago because my last long was here, and then this cash, and then you get this sideways. I should have been on it right there, but still there's room for that to break. And then if it breaks below 25, big smash. Let's see. The fangs, this is all the big boys are losing money. Clean energy, ready to collapse. Oh, that's just ugly. PayPal, ugly. The Qs, not good. Rivian, as bad as Tesla, and or maybe even worse. They don't even have. They have all the same problems that Tesla has in terms of just not making money selling cars, but they don't have any favorable belief in the CEO, and so that's even worse than Tesla.
The chart certainly looks worse, I think.
Good Lord. Nobody's buying cars. Simon Property Group, this is the commercial real estate. That feels toppy to me. So if you were participating in any of the COTA 2s and were happy because it broke out above here, that's all ready to come crashing down. But if this shows support right here, then it feels like it's out of this channel, and that's all going to be support. And then you're able to buy it at the bottom of the channel. So if we saw some movement there, that's from 115 to 122, and then a breakout above that is pretty safe. That bears watching. Squarespace, fence sitter, treasuries very strong. I'm still liking my swing trade on this one. This was the big short swing trade, covered. COTA 2, emerging dragon long, from this is from 97. This is getting, I would have liked to have seen this do better. So my exit on this one will be right here. I'm not going to let it go below, call it 107. But if it breaks out above 110, I'll add a second position with the belief that it's going to 120. So I've got a little bit of cushion here, about plus $10 on 97, which is about a 10% gain. So I still like that one. Uranium, kind of dead money, but in the bottom of its channel. The VIX just get, excuse me. Now this one is kind of remarkable. Here's an opportunity. If we think that this thing is gonna fail, the markets, that's still on sale. That is not priced in big pain. Watch that one close on Monday, because I would almost put a buy order in at 16 with a $2 stop, so that if this blasts through here, I'm in the position and then I can adjust it. And it's a 1 hour move to here. But if it breaks above 18, 21 is in play. That's an opportunity right there. So the other lumber is collapsing under pressure from the housing market. Wheat and precious strength in silver and gold is moving pretty well. Let's see this wider. Still kind of a fence sitter. U.S. Steel. Not bad. It's like Alcoa, I think. It was still holding its support. Still has, it's like a fence sitter inside the 30-day. So I could, and it had a good run on Friday. So I could see a recovery here. But if this starts rolling over, you could play tactical short intraday with a turbo. Then if it breaks below here, the 10-day low, second position short, because then it's going to come to 21. If that breaks, add a third position with targeting of 19. And if that breaks, we should have 4 positions short, because this whole cluster here is going to collapse. Last one, XBI, biotech dead money. Materials just starting to collapse. Tech collapsing and a fence sitter, but that doesn't look good. Staples, the long stable run up that we saw on the regression lines, that just cracked and it's collapsing down to here. So 2 legs down, 73, then 71. That's a bad sign. Okay, that's everything we got for tonight. We'll get this published and posted. Thanks for playing along. Hopefully you found that helpful. Treasuries, man. Treasuries and commercial real estate, those are ready to be protected.
Yeah, I'll keep my eye on them.
All right, boss. We'll see you on Monday.
Yeah, see you then. Have a
Yep.
good evening.
Yep.
Bye.